I'm just wondering. I detect a slight like English kind of UK accent. Is that, are my ears deceiving me?
Oh no, you're hearing it. I do. I'm definitely British.
Awesome. Okay. All right. I didn't want to offend, but yeah, that's cool. Good for you. Yeah. So I guess the first part is kind of like how to attract or raise capital, which I purposely made it broad, so then whoever's discussing, we could like parse it out into like smaller, finer elements. And then the second thing was like how to basically kind of build like a high performance team to join your startup. How one raises money, how one, especially in this environment, right? Because as you and I know, it's increasingly difficult to raise capital in the current sort of economic and geopolitical situation.
Yeah, no, I believe that I think where we would start is one has to understand whether or not their startup is capital. Is it a company that is scalable to be able to? Because a lot of people just negate that fact. Is your company ready for capital investment? Is it even investment worthy, right? Because some things that you build aren't actually capital raising opportunities. Is you get what I'm saying? I think if we go to that, because
Absolutely.
service companies, anything to do with services, if it doesn't have a SaaS related thing, then it may not be investment worthy, right? So once you understand that you do have something that can scale, you now need to think about where and what stage you want investments, right? Let's talk about the investments. You have your friends and family round, right? That would be the initial thing. And for people in my community, we don't have that like luxury. I don't have friends and family. I wish I did, right? That was able to fund me to just get going. So I bootstrapped. A lot of people in my community tend to bootstrap. That's just what it is. It's how it's done. Some people lucky they get to invest and get angels investors out the gate with what they call that the napkin friends and family round napkin idea. But once you get past the initial development and have what we call an MVP, a minimum viable product, and you have users traction, then that would be the point where you may want to further get investments. Now that you can go down the angel route or you can go straight to the VC. But the thing about it is venture capital investors, you need to have certain things in place to even be ready for VCs, right? Are you in Delaware? Do you have a corporation? Do you have shares allocation? Like all of these things need to be done before you even talk about getting capital investment. What do you think?
Absolutely. I think oftentimes founders suffer from what I call hopium, which is hope that's not grounded in reality, unfortunately, right? And we could get into that maybe another podcast. Just thank you, welcome. I just wanted to say hi to Chase and Sensei and the other listeners. We decided to kind of make this a podcast style, kind of back and forth, just for hopefully something that all of you listeners and can sort of glean some gems on. And if you do have questions, more than happy to field questions in the comment section. Um, yeah, thank you for joining. And I appreciate all of you giving your time to both Johan and myself. Prometheus, nice to see you as always. So yeah, we're just to reset the space. Johan and I are going to be doing kind of more of a podcast style and just discussing two main points in terms of one, how to raise capital, and even if we're ready to raise capital, right? And then the second is, if we have time, is to talk about like how to attract like star performers, quality people to your startup. So yeah, so I think you have really, really good points. One of the first things often is before people even get to the venture capital stage of their startup, it's raising money through friends and family or angel investors, right? So there are people, hopefully within your network as a founder, where you have professional friends who might have some disposable income, as it were, and they like believe in you and believe in your vision in terms of your company. So I think that's a good yeah, you raise a good point there. And then also, you also raise a good point in terms of like oftentimes founders, when they ask for money from, say, at the pre-seed or seed stage, which is usually raised from like friends and family or like angels, they don't have an MVP. They don't have even a wireframe, like a non-functional, let's say they're building an app, a web app. They don't have a wireframe. They don't have a mock-up, right? Which, to me, especially in this day and age, I don't know what you think, but Johan, like I think in this day and age where capital is in short supply and like interest rates are high, investors are a lot more savvy.
Yeah, no, 100%. And the climate currently, when it comes to investments on the VC level, is it's a really bad climate. It's actually reminiscent because I kind of study, when it comes to GDP and things like that. We're in a very bad era. It's almost as if it's reminiscent of 2020. I think it was 2007 when we had the first recession. When it comes to investments, they're holding on tight, right? Because AI has taken over the climate, and it was just like when crypto came out. That was like a fad. Right now it's AI. And so a lot of investors right now, the funds are just not there because our economic climate is just off. If you look at the stock market, right, you kind of need to even research this. I think to be a good founder, you need to be embedded in what the world economy is doing because then you can kind of strategize the best way to move.
Absolutely, I agree. And in this day and age where the global economy is so interlinked, uh, it's it's something where as founders it's important to sort of consider second, third, fourth order knock-on effects. Where I was just reading and posted last night about how there's in terms of the Middle East and like wars and strife, the a lot of the shipping is actually being diverted away from the Suez Canal, and they're actually going through from Far East Asia through the South Africa. So, like costs alone in the West Coast, like shipping from Far East Asia to like the West Coast, is up 50%, and it's worse in Europe. So, absolutely to your point, I think it's important. It's incumbent for founders to be aware, fingers on the pulse, as it were, in terms of like, you know, geopolitical happenings, for instance.
Yeah, right. And just to go forward back a little bit, because when it like for me, okay, like the main thing is understanding what it takes. Because I when I started out, Tim, I knew nothing. I knew nothing of the tech world. I knew nothing of venture capital, and I knew absolutely nothing. Pitch decks, what were they? Like, did not know. I knew what a business plan was. I've built businesses. I've been an entrepreneur for a while, but I mean, to the bare minimal. But when you go into the world of being a tech founder to the scale where you're looking for venture capital funds, like I knew nothing. And I had to immerse myself in learning. And I think if you're going to have an idea, it's great. Have an idea, be a visionary. Understand that your idea is not going to get you through this. It's just not. You have to understand every facet down to the financials, the numbers, the strategy for launch, your team. I mean, I could go on, right? But let's get to because we're talking about capital. So I want to focus heavily on how we raise this capital. One, you have to understand whether you're ready for capital investment, and that starts with the structuring of your company. Like if you're an LLC, it's fine, right? But you can't get capital on that. You might be able to get an angel that's willing to take a risk because that's what angels are really. They're a step up, a step below the investments from venture capitalists, right? And they're just giving you money because they trust in the idea. So maybe that's the strategy. Maybe you're not ready yet and you know that you don't have the financial capital to do all of these things and this is where you're at, but you want investment. Then you now need to think about how do I find these angels? Is your network sound? Do you have to build your network? For me, my network wasn't sound. I dedicated a year. I think it was in early 2022 to build out my LinkedIn, and I focused heavily on personal branding on that so I could build my network. So when it came to thinking about investments, people could go, my brand identity was there, who I was. I didn't really have to talk too much. Most people who I spoke to before I sent them a single pitch deck or had a single conversation knew what my company was because I had made sure that brand identity is inbuilt in every social media. So before speaking to me, you already know.
Absolutely. That's wonderful. I think it relates to, I think, not just raising capital, but like networking itself. You want to be top of mind, right? And oftentimes in a company, a startup especially, but even a large company like Apple, if I say Apple, you think Steve Jobs. Most people don't think Tim Cook, right? When I say Tesla, you think Elon Musk, right? So, to be top of mind, you have to put in the time. I'm sorry if I say this half jokingly. If you listeners were hoping for like a nugget where Johan and I can say, "Oh, this is the magical formula. Just follow this A, B, C, D, E, F, G, and you're gonna get like $1 million check." I mean, I wish that were true, but I don't BS. And it's like a situation where, again, you got to be top of mind and you got to put in the time, whether it be like being in spaces like this or networking with people in real life, increasing your brand profile of your startup. It's incumbent to being top of mind, because let's say all things being equal, right? Johan has her startup and I have mine, and we're applying to a funding from the exact same person, right? So it's an angel investor. Let's say it's like Emma. Hi Emma. I just wanted to say hi. So, uh, you know, it's like, maybe like she's like, from a very like rich, well-to-do family from China, and she's like looking to like park money in like, projects that her friends are doing that she thinks are worthwhile to invest in, right? All things being equal, if Johan knows Emma better, and I'm just like a number, I'm just a pitch deck, all things being equal, she's gonna invest in Johan's startup, right? So, it's important as a CEO, not just to kind of mind the day-to-day operations of the business, but it's also important to raise enough capital. So the general rule of thumb, according to Y Combinator, is you want 3 to 6 months runway. So whatever your burn rate is, let's say, taking into account office expenses, blah, blah, blah. Nowadays, most people like work from home, right? Let's say it's like $2,000 a month that your startup spends. That's your burn rate per month. So you want to have at least $6,000 in the bank, right? That's 3 months, right? But 6 to 12 months is sort of the range. And as a CEO, if you're like getting less than that 3 months, you really need to like hit the pound the pavement, as it were, to ask people for cash, which is, it's not easy. Someone once told me, and I thought it was a wonderful analogy. It's like asking people for large amounts of money is sort of like asking someone for the cars to their Ferrari, and their like husband or wife is like in the Ferrari. Which is to say, like you're asking them to really trust you, right? And your business, which is, it's a big responsibility to be sure.
No, 100%. And some tips, just as the listeners are there. Let me tell you, if funding is a big issue right now and you don't have this runway that Tim is explaining, some tips. If you're not ready for, investment and you feel like you don't have your shit together, go and find grants. There is wonderful grant programs right where you live, your city. They do them all the time. There, you just need to search. Put yourself out there because that actually helps, and it's a strategy that I've used to build my network up. I've applied to pitch in my cities nearby. I don't even care if I win the pitch competitions. Just making it to the pitching gives eyes on your company and gets you more network, conversation, dialogue. This is what you need to do. And hey, one of the things I will say when it comes to pitch competitions that I had to learn the hard way is like I used to get disappointed when I didn't win them because I was like, if it's based on innovation, um, I should have won that, right? But again, each city has their agendas, and so what I've learned from that is go in there with the idea that it doesn't matter if you win. The main goal is to get all eyes on your company and to build that network and have that dialogue. Start that conversation to people that can make it happen. Because at the end of the day, if you do end up with the check, great, you've got money to add to your company. Pitches, grants. There's a shit ton out there. Just start doing the research. This is another way to actually get your company funded in a way where you can, one of the things I do say to a lot of entrepreneurs that come and ask me questions is VC and investors and angel investors, they sounds nice, but what are you willing to lose? Because it does come with its sets of stipulations, control. So if you don't have everything together, maybe you're not ready for these investments because that's heavy and control might be lost. And if you don't even have a full grasp of where your business structure, your scale is, um, yeah, be prepared. So being able to be self-funded, whether you have revenue from your business or you're bootstrapping and getting grants, you still keep control. And so maybe I want everyone to hear that like control in the beginning is really beneficial to you because once you start getting down the route of capital funding, it's a whole different game.
Absolutely, I second that. So two things, really. There are so many grants, there are so many loans, at least here in Canada, for instance, right? And Chase knows what I'm talking about, right? Like MyTax, so MITACS, that's a really big post-secondary sort of government-funded institution, as it were, that connects startups and researchers with government grant money, right? So let's say my friend Chase and Prometheus down there, they have like this great startup idea, but they need to do validation. Maybe they're at the research and development phase, right? They need to double check and make sure that there's a scientific basis for their new like invention, let's say. So let's say they're partnered up with a PhD researcher in like the University of Toronto, right? So they can tap into a government institution or directly to the government or an agency like MyTax, which is it facilitates researchers looking for money to government money, right? So government grants, 100% loans as well. So in the States, there's US aid. I remember yesterday I was sitting on an ITT space. There was a gentleman in Nigeria looking for investments, and more specifically, he was looking for um, guidance in terms of a meeting that he has with, I assume it's USAID, but a meeting at the US consulate. So, there's even international, right? Obviously, like in the international level, like the World Bank, right? So, but, 100%, it's, I think, important to realize that sometimes we just got to look around and we got to like, uh, you know, um, do the work and, figuring out what government grants are available, right? Because it's in the best interest of the governments to keep jobs local and to stimulate the economy.
No, 100%. And, you know, I'm going to tell you guys this. A tip, if you are applying for these grants, keep a list. Keep a track on it. I use Trilio to really like keep track of every person I've contacted, every person I'm waiting to hear from, every grant application, every pitch competition, because it does get chaotic. And it is a full-time job to do this because your job as a CEO is to make sure the business is funded, flowing, can still work. That is your actual job to make sure that this continues, right? And so if you don't have like a structure to keep track of it, it does get overwhelming. So I'm just gonna give you guys that nugget there. Find ways to keep a record of wherever you've applied. And hey, some of these grant programs, they actually do them yearly throughout the year. So if you don't get the first one, you can always reapply at the end of the day. And so if you keep a record, you can then put dates and deadlines. That's how I keep track. So that's a heavy, nice little tip for you guys. But to say, Tim, I do want to talk about when you talked about loans, right? And the only reason I want to go over it is although I agree with you, um, you have to one know what your business plan is because getting into debt may not be the avenue. And in fact, a lot of investors don't like debt heavy businesses. So when you are looking into the loans, if you can, great. But I would highly suggest you strategize that debt to income ratio with your business structure because it doesn't look good, right? To start so early on, you know, with a loan. So if it works for your company and maybe you need money to get products out there, maybe that makes more sense. But when it comes to software or things like that, yeah, if you got debt using your credit cards and stuff like that, I don't think it's going to look good in the due diligence section when it comes to investments.
Absolutely. It's a yellow flag, potentially a red flag. And, to further Johan's point, there's so much research out there. A good resource is Pitch Deck, and there's like TechCrunch, for example. So you can do research of like what's your competition and like what are their like debt ratios, for example, right? You want to sort of be in line with your industry competitors. If you're like on the top 5-10% in terms of like just a high debt ratio, it's as a VC, I have to say that's a red flag, right?
I was texting you on the back end. So I think we should open up to floor. Anyone that wants to come and be a part of the conversation, Tim, what do you think?
Sure, absolutely. Let's do that for maybe some Q&A.
If anyone wants to come up, just request it. We'll put you up. But me and Tim will carry on, and unless there's any hands, that you definitely don't have to stay as a listener. We definitely want you to be a part of the conversation. Some of you may just be listening for tips and tricks. Some of you just want to hear the dialogue. It's okay. We'd love to hear from you. But Tim, going back to the pitch deck, which the resource that you gave them, let's talk about that. I think we do need to talk about pitch decks.
Absolutely. It's the way I liken a pitch deck is it's like the it's almost like your resume when you're applying for a job. You want a standard resume that's like you can use as a template, but then just like your actual resume, if you're applying to a job, you're gonna want to customize it at least a little bit or a lot if you really want that job, right? So similarly, different investors might have different risk tolerances, have different things, or different investors might have things that they consider important, worth highlighting, right? So you want to speak to that, right? Just like the gentleman I was advising yesterday at the ITT space, he was looking for investment, probably from like US aid, right? So, speaking to government entities is a different beast altogether than, let's say, going to like venture capital, private equity companies. So I guess that's a really important part. And in terms of pitch deck, you know, um, the pitch deck is sort of like your long form. Your long version, it's like the 3 page. If you had 10, 15 years of experience like I do in terms of industry, it's like my resume is like 3 pages, right? Uh, so your pitch deck is like kind of a long form like content in terms of your company and its mission and its people, the team, right? Uh, One thing that's really important in a pitch deck is you need to have an exit, right? So an exit would be like, okay, for example, we want to build a better mousetrap. Okay, that's our startup. And so we want to be acquired. So that's our exit plan is we want to be bought out by bigger company. And, we're going to make ourselves as founders, as employees, and as investors all rich, but, not mega rich. We're not going to be billionaires making a better mousetrap, obviously. So it's just like, but the plan is that like we already have an exit plan in place that we're going to be acquired by like a bigger company, right? And then that's where like M&A can come in, mergers and acquisitions, or it could be like IPO, right? So
You put hold on, Tim. Hold on,
sure.
Tim. You put all of that because so pitch decks to me are a small content of your business plan. Um, I'm wondering if we're talking about the same thing. I do agree. I think it's more of a business analysis where you do the acquisition and plans. I don't think that that should be on the business plan. I'm. Do you do that?
Sure. I guess to kind of put a bit of nuance, like it's not like we are looking for, as VCs, we're looking for like a three-page, like 3 slides on the pitch deck, detailing your exit plan, but like having at least something, right, that speaks to like, okay, well, what is your goal as a founder? Like, what is your goal to, in 5 years, 10 years from now? Do you want to be like bought out by another company, or do you want to like take this public, right? And this is where, again, this is nuanced, right? So there's no like standard thing, just like there's no standard like resume. Like if you're like an artist, if you're a teacher looking for a job versus like an engineer looking for a job, the format and the tone of the resume and is different, right? So um, that's where it's incumbent upon the founder to know their audience. Obviously, you shouldn't change, and I've seen this as well. In terms of founders, sometimes they change their pitch deck so much, it's like almost like two different companies applying for funding, right? So you don't want that too, because that's not being like that's not having integrity, right? When you're saying, oh, my mission is X, and you say that to like one investor, and then you say to another investor, oh, my company's mission or goal is Y, and you're doing it to like attract money, right? And I've seen that, people that are desperate for money, and like that is not authentic, and that's definitely a red flag for me. So um yeah.
Okay, so I definitely want to say when it comes to investors, they do have a standard pitch deck that they look for, right? You have to have, at the end of the day, your problem, your solution. They definitely want to know that you know the money. They want to understand the market, right? So in terms of market size, and the market size is the area that I think a lot of founders stumble on, because understanding your TAM, your SOM, your all of that like that took me months. I'm not even gonna lie. And I'm gonna tell you, if you know that that's an area you're weak, it will pay you to pay somebody to get it done, to get it accurate. um don't feel bad about it. Just get somebody who knows their shit, can get that right, because when investors ask that question, you need to know how you got there. And I actually, for me, I'm gonna just this is just me, full transparency. I paid somebody to do this for me because I know that this is the area that investors scrutinize. That market size, you just can't pluck a number out the sky. Okay. And so once you get somebody that does it, get them to break it down so you fully understand where they got the sources from, how that interconnects with your business model. Because on top of the product page in a pitch deck, you need to understand your revenue model. Okay. How is it? Because at the end of the day, for investors to even want to be here, they want to understand what goals you have to make money. Now, granted, Facebook and all of these social medias, they don't have like revenue streams immediately, and sometimes that works. However, a goal is to make money, right? So that you definitely have to have a revenue model or some kind of way to make funding, right? To get that company, because you can't just keep asking investors to keep pouring. They're gonna want their money back, right? That's the whole point. That's VC's jobs, right? And so after you do that, the next thing would be competitive analysis. They want to know that you've researched your competitors, right? They definitely, in this climate, I'm going to tell you the two or three main pages on your pitch deck that is warrant in this climate today, 2024, is going to be your solution, your traction, and literally revenue. Those are the three things investors give a shit about right now. Okay, revenue, traction, and the solution. What is it that you're actually building that fixes the actual problem? um Traction at this point, to get to investors, you need some traction. Now traction can just be downloads, it could be people. You may not have revenue yet. Traction is a lot of people think traction would be money, but it can actually be that you maybe put a web page up. I'm going to tell you a company that did this. If you guys aren't familiar, Dropbox had no product whatsoever, and they got 50,000 requests for their product with nothing, no code. So it can happen, and that is considered traction, right? So don't get bogged up on these terminologies, because once you understand it, you need to be able to show that you get it, and show them that you have traction. For instance, with us, we haven't launched yet, but we apologize. My 10-year-old is calling me right now.
All good. I can step in real quick and like I think what Johan mentioned about SAM, and SOM is worth unpacking. So, uh, TAM stands for total addressable market, which is the total overall market that your product could potentially serve. This is somewhat hypothetical, and few companies will ever be able to service the entire TAM, total addressable market. So let's say you're selling toothpaste. Well, there's 8 billion people in the world. Every one of those people needs toothpaste, right? But realistically, are you going to be able to capture the entire market? No, because there's incumbents. There's Procter and Gamble, P&G, right? So that's TAMS, and then SAM is serviceable available market, which is the subset. So imagine like three concentric circles that are like the biggest circle is TAM. The smallest circle within that is SAM, and the smallest circle within all those three circles is SOM. So SAM is serviceable available market, which is the subset of the TAM that you can realistically, the keyword being realistically and logistically capture based on your specific business model, targets, goals, and sales strategy. So maybe, to use my analogy here of toothpaste company, you're selling toothpaste specifically for children, right? That are like 6 years old and younger. They're like, ugh, I don't like the taste of toothpaste, blah, blah, blah. So it's like nice and like, very like, more pleasant for them to like brush their teeth with, right? So that is your serviceable available market, right? And then SOM, which is the final bit, is SOM stands for serviceable obtainable market. So that's the portion of the SAM that you can realistically win in the short term. So let's say in like 6 months or a year.
Yeah, absolutely. Thank you for that breakdown. I definitely I told you guys transparency. That getting that thing right is the most difficult thing because if you just multiply the numbers, some savvy investors are going to look at that. They're like, when it comes to the to the addressable market, they literally scrutinize that hard. So if you leave here with nothing but this, make sure you spend a lot of time on that area. Don't just throw numbers together. Really hone in on that. And if you know that that's the area you're weakest, get help.
Absolutely. It cannot be highlighted. I would say probably that would be the take home message if you forget everything else that Johan and I say. Uh, like your numbers have to be rock solid, because that's part of the due diligence process. As serious angel investors or as serious venture capitalists, we will be looking into the market that you're operating in, right? What is the TAM? What is the total addressable market? Okay, maybe you're building a thing. I remember Emma was pitching to Josh's ITT space a couple weeks back in terms of a startup idea she had for education, right? So it's like, okay, obviously education is it's an evergreen thing, so that's a sellable market, right? Because every kid needs and hopefully adult are continuing with their education, so education is evergreen industry, right? And then it's like, okay, well, let's put a dollar value to like your total addressable market to, let's say, if your startup is within the United States, so you want to talk about the total addressable market size in the States, but you're like maybe operating out of the state of Texas, right? That's where your LLC is, that's where your headquarter is, and that's where your first customers are going to be. So you're not going to capture the entire like education market in the States. It's going to be within the town, the city that you operate in. That's the starting point. That's the foothold.
Yeah, right. And no kid you not. I had an investor literally comb through that for me. And then went as far as requesting me, well, you're in Florida. What is the addressable market in Miami? I was just like, what? Because I had already niggled it down to Florida as a whole, because that's our launch, right? Yet they wanted more. So when I tell you, kid you not, y'all, this is the area you need to dedicate time to because you're gonna get requests that if you haven't thoroughly fought this shit out, you will stumble, and it could be the result of you possibly losing an investor. I with this situation, I actually refused the investment because it was just, are you investing? Some people you will find just waste time. They're going to constantly ask for things, but the dialogue about cash and signing a check never ends up happening. You have to be able to know when to just, this is not maybe the investor for me. Because when you do get an investor, they become a part of the team. Don't just assume they're throwing money. You need to be strategic in who you're asking. It's not just about somebody cutting a check. You really need to think about whether or not this is actually going to be a good thing for your company. This person, their network, their funds is worth it. Because I did have a founder friend of mine tell me he could give me a warm introduction to this guy, but without him telling me too much details, this person invested in his business and he regrets it. So that was I'm not going to do that for you because I'm saving you here, right? So knowing who's invested is also a tricky thing. But I'm going to also make sure you guys understand another key thing on your pitch deck, just in your business period, is your team. That team slide is going to be a key thing too. Because above everything else, if your team is strong, investors do look into that, and you might get a lot more doors open just based on that. So don't just get people who could do the job. Make sure your team is strong.
I totally co-sign on that. Your team, in terms of, let's say, your first 10 employees or contractors, your co-founders, will, mark my words, make or break your startup. And I speak from experience. My first startup, which was a spectacular fail, and I don't mind going on the record on that and sharing not just this, but in subsequent sort of spaces, I spent over $100,000 of money on that startup personally. It was a disaster. But there were a lot of learnings, and I think one of the learnings is founder fit. You want to, and Alex touched on this in one of her spaces, I believe, last week, which is to say, you, in a startup, you actually don't want people that are like all you know friendly. I'm not saying that should, like, you should be like fighting like cats and dogs or whatever, but the point is, like, you want diversity of viewpoints. You do want a baseline level of, hey, we have a common set of beliefs and values, right? Ethics, right? That is non-negotiable. But oftentimes I think people are like, startup co-founders, they're like, oh, but we provided everything for our employees. They have, like, a nice, like, ping pong table and a nice this and that, and like even like a beer room, and blah blah blah. Well, at the end of the day, you're a startup. You need to, like, make cash, and investors, when they invest, to Johan's point, they're going to be like emailing you, they're going to be phoning you, they know where your office is, they're going to maybe even come visit your office to know, like, to see, like, what the situation is, because they want a return on their investment, right? So as a CEO or as a founder, it's incumbent on you to demonstrate to the investor that their money is actually being put to good use. If they see you, like, as a silly example, like, post pictures of you, like, driving a fancy car or something, like, after, like, cutting like a $2 million check, it's like, it's going to reflect poorly on you and your startup.
No, 100%. Uh, Team picking. Oh, that's a whole segment. I don't even think I want to go into that today, because that's actually 2023's challenge for me. And I did mention it in the first episode of Founders Hub, a little brief breakdown. Picking your team is definitely vital. And so I'm not going to go too heavy into that. Tim said enough on that one. I definitely want to ask if there's any questions, because we've said a lot, and I really want to open up the floor to any questions that you guys may have. What's up, Chris? And if you don't want to come up and speak, definitely put them in the little the blue pill at the bottom, whatever color it is for you. Definitely do that.
Absolutely. And it's like, uh I speak for many people here in this, like, space. We want to see other people succeed. In fact, that is one of my missions, as it were, I would say, in terms of life goals, or as a investor, is I want to help as my bio in my Twitter suggests, right? Advise and build, right? And build includes investing, but also giving free advice. Because I really believe, what comes around goes around. Some people call it karma. I just say, you reap what you sow, right? When you give value upfront, right? It's gonna it's gonna eventually come back to you in some way, shape, or form. Hey Emma, how are you?
Oh, I thought I was on with my mic, but I was muted. Thank you for having me on, Tim and Johan. Thank you for the conversation. And I think it's very, very I'm so glad that we have you sharing your expertise and your knowledge with us with raising capitals for startups or people who are looking for investors. For somebody who's really new into the world, even though I worked in product and startups, I wasn't in the in the position of investing or receiving it. But I always wanted to learn more. So I'm just here to learn. And thank you, Tim Yuhan, for giving us this opportunity to share your knowledge.
Absolutely. Thanks for joining us. Yeah, it's I encourage people again, to Johan's point, if you have maybe questions and you don't feel comfortable or you're busy or the background noise is too much, you can put a question or a comment even on the purple pill, the chat below. Um, we're more than happy to share our, learnings in terms of work experience as well as research, and hopefully, to better, everyone's game in terms of this year and our career aspirations.
Yeah, 100%. And honestly, Tim, I say this because being a founder is not easy, right? Uh, but also understanding the way investors think. It was something that I really felt that I needed to understand. And actually, 2023 became the year that I became an investor myself. I created a firm. I'm not pushing it right now. I'm not even focused on it because I'm also planning, strategizing so far down the line with the growth of my company on a personal, like what I can give back. And so I plan ahead. That's just how I am. So I have my venture firm sitting there, but I made small, tiny increment investments just so I can kind of sit where investors sit, so I can actually understand the way they think. So this is something even if you don't plan on being an investor yourself or an angel or whatever, understanding how the investors think is gonna be key as a CEO for you to be able to, like, really just do that pitch well, because once you understand the way your business flows and fully understand the way you're positioning it, and I'm not gonna go too hard into positioning because that's a whole different topic that I plan on doing in Founders Hub, because positioning is gonna be your best friend, okay? Because it's one thing to have a problem and a solution to that, but knowing how to position it to your customers for rent to park, for instance, right? People talk about who's your target audience. We have a marketplace. Marketplaces are notoriously difficult. And I get so many investors in the very early stages when I would pitch it, they would just be like, yeah, what are you going to do with the chicken and egg problem? And it's just like the most ridiculous question I've ever heard. Because if you sell a product, you have a fucking chicken and egg problem. just it literally pisses me off, but that would be what I would get. So I made a point of making sure I understood it, because I don't just have one target audience. I have a marketplace that has four different identities for my customers. So I made sure that I knew this, because this is the question that people ask. Know what your company's structure is. If you have a SaaS company, who is that target audience? If you have a marketplace, understand the two balances, because you will have supply and demand issues. Any marketplace has it. I'm hoping that through all of this, whenever, maybe 5 years from now, I might have a book on it, because I have searched profusely for a book to help me understand the chicken and egg problem. I don't find much. So maybe that's something that's the universe is telling me to figure out and write. Um but we're not there yet. But yeah, definitely understanding the positioning of your company will help you with the central things that we've discussed today, the pitch decks. Because barring the solution to the problem, you're going to need to know your competition. What makes you different? Because here's the thing. That unique thing that makes you tick is not a feature. Don't get confused with features, okay? Because features can be added. I mean, look at X, for instance. Where were Spaces? They just added this feature. Now they're rivaling Clubhouse. I really want you guys to understand that. That's not enough. Features are not going to cut it.
I totally agree. It's the complete package. I know that's a tall order, but that's like part of it is like the team. Are they like, do they know each other? How long have they worked with each other for? Let's say, it's like I'm me and Johan used to work together at Apple 5 years ago, and we were colleagues for like 10 years. So there's some history there. That gives investors a little bit more confidence that, hey, it's not just like, three people that met off the street and be like, hey, we have like $1 billion business idea. Let's like do a startup, right? And I think a really important element as well on the pitch deck is, I mean, if we're going to write you like a $50,000 check to do like a pre-seed round, like what is the money used for, right? You got to address that. Like, is it used for, building your MVP, your minimum viable product? Is it going to be used for like hiring a sales and marketing person, right? Really important. Also, I just wanted to say hi to Chris. If you want to chime in, if you have a question or a comment, welcome.
Hi, Tim. Hi, Johan. And Wiz, good to see you here. And Emma, I haven't met you before either, but it's good to be on the stage here and say hello as well. I'm really interested in this conversation, but I'm kind of coming at it from a different perspective at the moment. Like, I'm not at the raising capital and attracting high performance yet. I'm kind of way at the beginning where I've just recently come out of a bad startup that was kind of like stop start. And I'm kind of resetting and kind of like calibrating my, I guess, like everything that I'm up to at the moment. And so I do have a question. Kind of, I unfortunately missed most of what was just discussed, so I'm going to go back and listen to the recording. But I do have a high respect for Johan and the conversations she holds. So I'm really happy to be here to maybe possibly ask this question as somebody who's kind of entrepreneurial minded and has the skills, but is in one of those moments where it's like taking a breath, recouping, recycling, and getting your efforts back into like the upward rise again. Where are good places to essentially say like, hey, I'm not trying to do a startup at the moment, but if you need my skills for any kind of teams that are around who do have a use for this, essentially like what's a good way of going around saying like, hey, to startups who need someone who has these skills, I'm here, kind of a thing. Oh, and sorry, and to clarify a little bit about me. Hi, I'm Chris. I am a prior tenure, sorry, kind of looking at something outside of the window at the moment. I'm a 10-year Air Force veteran, master instructor certification. I taught technology while I was in the Air Force for a bit. Then I went out to start kind of my own startup, and I realized it's a lot slower of a process because I had so many skills to kind of gather in the moment to be able to do that. And so I have tons of respect for the people that are creating content and essentially educating and passing their time on for free to help people who are in my position and on the way upward. And so I'm here essentially as a 3D front-end designer for companies who want to have some sort of like better visual representation of their products. And so that was where I was kind of doing my startup towards. I just set up with the wrong team, so I'm kind of starting over and just kind of reassessing, pivoting, and like working on that again. But it's awesome to be part of this conversation. I might just drop down to listener if that's okay. Just wanted to come say hi as I was invited to speak. But I'm really glad to have these conversations be part of my circle and that I can hear them and understand some of the insight. Johan, you made a really good point. When I was beginning, just a little bit ago, I'd say maybe about 2 years ago into Web3 in the NFT space, I started kind of checking into the idea of like, okay, well, if people are creating NFTs, who's collecting? And to really understand the purpose of NFTs and stuff, I started collecting my own. And that really kind of helped me understand the dynamic of the whole environment a little bit better. And so to the point, that's such a key insight. If you're going to try to sell something, it's really important to also understand who buys this, and whether it's an idea or a product. But yeah, I'm just here to cruise through the conversation. Thank you.
Absolutely. Thanks. I can take a first crack at it in terms of your question, but you mentioned something I think is really important that I want to just expound on really quickly, which is the user experience, right? So your startup is minting NFTs. Great. Your startup is building a better cell phone. Great. Understand your user experience, right? I remember this business case study. Someone asked, maybe it was like Business Insider, some journalist asked basically one of the founders of Airbnb, what was the best business advice you ever got? And he said, my mentor told me, look at your current traction, your current user base, look at the top 100, something like that, the top 100 users that use your app most heavily. Hire someone that's a storyboarder and storyboard like their user experience. It's like, oh, okay, maybe it was like difficult to like, figure out how to like book things on the app because the calendar like is kind of clunky. Or I'm a Airbnb host, and yeah, I'm making a lot of money, but at the same time I'm spending a lot of money because I'm finding like bad quality Airbnb guests, and it's like they leave and like the place is trash because they like threw a huge party, right? So that's a pain point. You got to understand your user experience, like their pain points. And one of the best ways to do that, because I mean startups, unless you're like the size of Airbnb, like you can't hire like a full-time storyboarder, you got to like go through that yourself, to Chris's point, right? Of like he was like, oh, to understand the NFT space, I like bought and I collected NFTs, right? So you kind of understand the space from a user perspective, because you want it to be, minimize the friction. And the ultimate example of that, one of the examples of that would be like, Amazon, that is just like one click buy, right? And next day delivery. I mean, that's like as frictionless as it can get, basically. So in terms of your question, I think that's a good question. And I think part of it is, and I'm sure you looked into this, but maybe there are more like headhunters as well as agencies that are like, that are looking for more experienced individuals such as yourselves, that um, that they can kind of keep in mind and essentially kind of help you. They're the facilitator between startups looking for talent, right? And you being someone that is talented, right? So, agencies, I think headhunting agencies, web development agencies is a way to go. And then there's like some other like online platforms like TopTal, TOPTAL, which is it's sort of like Upwork, but the monetization is a little bit different. So I'll post the URL for that on the chat. But yeah, Johan, if you want to chime in to Chris's question,
No,
by all means.
definitely. I was going to say some of the things that you mentioned, but Chris, it really, you need to figure out what it is that you want to do. Do you want to be a part of a company, or are you building yours? If you're just looking for, extra work related things in the field that you're in, Tim has already explained. I can't add to that, because otherwise, Y Combinator, if you're looking to be a part of a team, that's another place. They have a marketplace for that. That would be something, maybe you put a profile up to actually gauge traffic into what you're building, and maybe somebody has a similar idea that you can partner with. But I really do think people sleep on social audio. Um, I'm gonna be honest with you. I've found my team members through social media, right? These things. There's also, I think, what's that company called? It's another social media. I can never remember it, but I found some of my developers on Discord. There we go. Brain fart. I don't know what happened there, but Discord. Discord's another place. You might be able to find communities that do what you do, Chris. So don't sleep on these things. LinkedIn is another really good tool. With the way your pictures are, I don't think it will be hard for you. I hope that was helpful. Wiz, you can definitely take your turn now, because I'm done. I hope that was helpful, Chris.
Yeah, thanks, Johan.
Yeah, thank you.
And hello, Chris, and hello, Emma, and Tim, and Johan. Thanks for having me on here. I'll be here fairly briefly since I have a prior commitment, but I definitely wanted to come up and ask a specific question regarding the age we're living in, right? And that might age me here, but I grew up in a time before the internet, as in Nokia. Anyone remembers those big bulky Nokia phones that couldn't break even if you dropped a bulldozer on them? That's the era I came from. Um, and I definitely, as I'm going down memory lane in terms of significant technologies that have impacted myself and society in general, it seems to me that we're kind of running out of stuff to 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 create, right? And I don't really hear people talk about that. Most of what I see is, how to go about finding opportunities to get a project funded. But it seems to me we're moving into an era where that point is basically moot. And my question to you, really anyone on the panel, is how are you taking that into account?
Um, Here's the thing. I like to say that everything is pretty much ideas are always something stolen, right? So you're right on that, Wiz, right? There's nothing new under the sun. However, I think what your question really is what people are doing to kind of counteract that. Am I right?
No, so my question is, my observation right now is that we're running out of stuff to invent, right? Like once once we figure out how to make this AI stuff be autonomous, it's a wrap. Like there's no need for founders anymore effectively. So how are we accounting for that?
Yeah, I don't necessarily agree with that. I think there's always room for a new again, I do believe that everything has already probably been created, but how best can you make it better? Because if we all there's always a problem to something. I mean, just my idea right now, rent to park. For me, realistically, it was a solution to a problem. I come across lots of things that I struggle daily with. The solution to your answer would be find something that you find an issue with, because at the end of the day, that's the best invention. Because 9 times out of 10, if it's a problem for you, it's probably a problem for somebody else.
Yeah, that checks out. I very much agree with this line of logic. And last thing I'll say for me personally, as someone who's tinkered with all sorts of toys as I grew up, the Game Boy, PS1, PS2, PC, and all that. For me, to be honest, I really do think that it's kind of getting old, and this is a personal opinion of mine, and that's kind of controversial, and I kind of get that. So feel free to shun me if you please, but I really think that right now, in terms of solving problems, given the fact that large language models essentially have solved basically a huge slew of problems extremely quickly, I think it's going to take some time for users even to get on board in terms of being in the market to have that problem solved for them. In other words, for people to essentially take advantage of this new wave right now, there needs to be people on board for them to receive that service. And to be honest, based on the sort of research I do, as someone who predominantly covers the intersection of arts, culture, and tech, the PR for blockchain, ML, AI, and all that stuff actually outside of this bubble that exists on Twitter is very low. Most people could not give less of a shit. So I'm hoping to hear some more insights in terms of how do you even sell people on these concepts and ideas, whether it's solving problems or building tech and all that stuff. So thanks again.
Yeah, Tim, before we go to another hand, I just want to add to that. Like, here's the thing. It's kind of a gloomy way you think, Wiz. I've heard you speak many times, and I want to urge the audience as well. And he's valid in his thinking because that's his opinion. But I'm a visionary, and I say that. And if you consider yourself one, right? I'm always inventing things. I'm sitting on ideas that I could launch tomorrow that still are problems, solutions, and things that people actually will value. There's always something that you can design, create to make your life better. If you truly are a visionary, right? I mean, right now during COVID, the whole clean and making sure things that I had an invention that I'm sitting on. I haven't patented yet. I'm not doing anything with. I even have something that if Rent to Park failed tomorrow, I could start a SaaS company with another idea that I have. Again, it's about really understanding that, yes, everything under the sun has probably been created, but more than likely, if you have this major issue and it's a downfall for you, then the world, the population of the world, 8 trillion people are going to have similar problems. Now, remember, when it comes to creating products and having a sustainable company that's scalable, you just need to capture a percentage of the market, just a percentage.
Absolutely. And Wiz, no worries. You're welcome in this space. Your line of questioning seems like it's really from an honest, line of inquiry. So, I can't fault you for having an honest question. But yeah, just briefly before I give Chase a chance to chime in, I think that there's always going to be problems. So, you gave the example of LLMs. Well, there's a thing which is called prompt injection hacking, and unfortunately, you can Google it. It's unfortunately a situation where certain people, AI prompt engineers, figure out a way to sort of get the LLM to quote unquote spit out user data information, and so that would be an example where, yeah, it's true. AI is being very truthful. I think will be taking away people's jobs. But however, I think it's more like it's right now in this current iteration, it's going to take away people's jobs that aren't getting on that AI bandwagon, like knowing how to like prompt, right? How to use it. It'll be like Google. It'll be like, hey, just Google it. It's like, hey, chat GPT it. If you don't know, then it's kind of like it's maybe I don't know 5-10 years out, but it's going to be eventually as ubiquitous as like let's say like Microsoft Office, like unless it's like most companies just take it for granted that you're computer savvy and you know how to use like Microsoft Office tools, for instance, right? So, but yeah, just to kind of wrap it up and then let Chase a chance to like chime in. Thank you for your patience, Chase. It's I think there's always going to be opportunities where you have problems, you have an opportunity to make money, right? And that could be like people that are hacking AI programs to like release like user data, right? And so like cybersecurity, that's an opportunity, right? So I respectfully beg to differ that I think there will be opportunities, just like being able to position yourself as a person, as an employee, to see those opportunities and perhaps like pivot your career slightly or entirely, to that new opportunity. Mr. Chase, thank you for your patience. Go ahead.
Yeah, yeah. I actually just wanted to kind of add to what both you and Johan are saying, Tim. So, Wiz, I run a manufacturing company in northern British Columbia here, and um, we don't ever underestimate where this technology will bring you. And I just wanted to bring just kind of wanted to bring in what I do. So I run a manufacturing company, and we run everything through CNCs. Now in the 80s, CNCs, everybody's looking at it's kind of like where AI is right now, this new beginning. But here we are. I mean, let's do the math with 20, 40 years later, and we're just starting to break into CNCs as an everyday kind of, they're more affordable. And now we have to, I really believe that AI is going to be very similar in that it's going to open up the possibilities. Because I mean, we as a manufacturer, we're looking into AI and how can that help us? How can we use AI in the physical rather than just in the tech space, right? And so don't ever negate where this technology is going to go, because if you could relate AI into the physical outside of the tech world, you'll be ahead of the curve, and guys like me will be scooping you up so fast it's not even funny, because I'm old, I'm timing out, and I need some young guy who can bring both worlds together. So yeah, I just wanted to encourage you. There's a lot of positive coming out of the AI. So yeah, I just wanted to add into that.
Yeah, no, well said. I think there's just so much that can be, done with AI, even at its current, stage of development, to automate, right? And to, just automate and to upgrade, whether it be a manufacturing facility, to just helping build more efficient business productivity tools. I think there's so many opportunities out there. That's just my opinion. I think there's gold in them there hills, something like that.
Yeah, let's carry on the conversation to how to attract a high performers. Tim, when you titled this, what exactly did you mean high performance?
Sure. I think first and foremost, someone that you don't need to constantly motivate. This is important. Again, it goes to my earlier point about how your first, let's say, 10 employees will make or break your company. If you're always, as a CEO or CTO or COO, always have to light a fire under their bums, so to speak, to like get them moving, or if they're like, oh well, it's not in my job description, so therefore I'm not doing it. It's like, sorry, bro, this is a startup. Like everyone does everything, right? And I think it's incumbent upon like the founders to set a good example too, right? It's not just say do as I say, is do as I do, right? So if there's like an issue, if there's a coding issue and you do have an engineering background like myself, then roll your sleeves up and like get coding, right? Deal with that bug so the code can ship. um be that sort of cultural change. And that's the beauty, I have to say, of being like in the entrepreneur tech space. That's the beauty of 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 being able to. Sorry, I'm just pulling up Frank. Hey, Frank. That's the beauty of startups, is like you do have the ability as founders to shape the culture of your company, right? Uh, so um, yeah, to unpack that a little bit more, like high um, high high performers really, um, and I can't take full credit for this, but it's like there was a acronym that I came across from Tim Brown, who's a speaker on Spaces here. VALE, VALE. So, high value employee, V stands for visibility. Like, do they jump at every opportunity that presents themselves? For making presentations to internal and external, for internal or external meetings, right? Um, you know, are they asking good questions? That's something that even I would say in terms of Spaces etiquette is good, because the fact, if you do ask good questions, it shows that you're like listening actively, right? Um, so that's V, veils. So that's visibility, and then A is ask good questions. L is learn continuously. So are they learning off hours, right? But yeah, I would say, like, in short, I would say VALE, VALE, would be like kind of a acronym that helps me in terms of, think of a framework of what constitutes a high performer. So V stands for visibility. So does that employee like jump at every opportunity to, go the extra mile, for example? Do they, do things that are outside of their job description? So that's visibility, and then A is asking good questions, and then L is learning continuously, and E is exceeding expectations. So, is that employee part of the problem or part of the solution, right? Oh, sorry, can you guys hear me?
Yep, loud and clear.
Okay, good. Okay, good. Um, because I think oftentimes, uh, as managers, I mean, even if you're, frontline manager for a corporation, right? You don't want your employees, like your direct reports, just to be like, oh, this isn't working, that isn't working. Why isn't there coffee? This and that. They're just complaining, but they're not providing possible solutions, right? It's like, oh, there's bugs in this, there's bugs in that, right? And then you're just like blaming others, and you're just complaining. Well, as a manager, and I have management experience as well, right? I want to see an employee that's like, I see a problem. And here are potential fixes to it, A, B, and C. What do you think? I think option B is the best. Love it. Love it. So that would be kind of how I would, as a framework, think about like a high performer. Go ahead, Johan.
Yeah, no. So I want to definitely add to that dialogue. So, as a part of my team, when it was starting very small, I'm not going to say the company's name, but I applied for a cohort, and as part of getting through to the next round, they required all my staff and myself to do this exercise. It was like a quiz, and I actually was really grateful for this quiz in the end because I learned my employees' actual the way they work, their style. And I believe it was really kind of impactful because I had one of my coders, he's more like me. He's more of an entrepreneurial shit person. So when he comes to offering his ideas, his brain is thinking like a visionary, right? And once I did that, so I urge everybody, if there's some kind of quiz that you can take to get through and understand the personality of all of your hires or something like that, it's really good to figure out their style because then that adds to your leadership and how you navigate around them. Because the way techies, and I make this joke all the time, but people that are coders, they are in a different kind of realm of the way they think because they're very analytical, but they're always in the coding. But they forget the vision, they forget the strategy. They're not necessarily built for that, and sometimes dealing with them and managing that aspect is quite difficult. Um, and knowing how they operate is going to be pinnacle to how you manage them. Because I had two employees constantly seeming like they were bumping heads, but they were on the same team, and it's not that one didn't like the other suggestions. It was more so that one person thinks like an entrepreneur, so they're always thinking ahead, right? And the other one is more focused on getting the job done, right? And so that was what was happening. And once I understood it, I created structures within our organization on our weeklies for ideas. So that helps that one employee not feel like it was combative, and there was a space for them to push and give their vision and their ideas in a healthy way and allow the team to be able to give feedback as opposed to that static that was happening in our meetings, right? So that's one thing that I want to say, Tim. But also, when it comes to being a founder, picking your teammates, we talked about it earlier in the segment, but I want to just say this: knowing whether you need a co-pilot is going to be key because burnout is a bitch. And having everything be on your head is just it there's only so much you can take. And so being able to be strategic, I think it was rich that Robert Kiyosaki that once said, know where you're strong and where you're not, hire for it. Right. So you kind of need to figure out the areas that you know that you need immediately or you need in the future and strategize around that because that's how I've built my team. This is what I need right now and this is what I'm going to need later down the line. And I've built my team that way, and it's been so great. Currently, one of them is here, and I found him on a Twitter space. And so you never know where your next co-pilot could be. Okay. And so Altum is actually in the audience, and I met him a few weeks ago, and now he's now a part of my team as a UX UI designer. And the wonderful thing about Altum that I have to say in just a short just a week or so that he started is I don't need to tell him too much. He uses his own initiative and he's super creative. I gave him a task before I hired him just to see what he would do with it. And he gave me more than I asked for. So I knew off the bat he definitely has attention to details and definitely has, he doesn't need me to babysit him. He's going to give me more than I asked for. So that was one of the reasons I hired him. And so I say all of that to say to you guys, when you are thinking, I'm a solo founder. A lot of the times when you go down into the investment realm and they look at the pitch deck, they're always like, remember we talked about that slide that's important, that team slide. They talk about the team. But the reality of it is I get a lot of, who's your co-founder? I actually don't have a co-founder, y'all. And so this leads me and Tim to start talking about equity distribution. Tim, this is where let's get hands on your feet because this is actually the bit that me and Tim were talking offline about. And equity distribution is all encompassing the word that I'm using, right? Understanding how you are going to release equity is going to be key because if you don't have funds and you don't have the means to hire staff, then you're not going to be able to attract these high performers. And so now you to figure out how in the hell are you going to get people to do what you need without no money. And actually, once you position your brand and your brand's identity and understand how to sell you, that's going to be the best thing you can do for the company, because selling the idea is easy, but selling you, the executioner, because you will be the person that everybody looks to execute. And if you fail at that job, it's hard for you to get high performers.
Yeah, I couldn't agree more. There's just so much to unpack there, and we could probably, discuss this another time on another space in terms of SWOT analysis, right? What are your strengths? What are your weaknesses? What is the opportunity that's presenting itself before you, and what are the threats, right? And just being able to like hire as well as have collaborators or co-founders um, to kind of complement your weaknesses, so that as a unit, you can kind of like move forward together. But yeah, before we kind of unpack the equity distribution part, and I really want to kind of get into the meat and potatoes of that. Wiz, Frank, how about Frank first? Because he hasn't had a chance to speak yet. Frank, how's it going, man?
Going well, thank you. The three things that if I was to try to attract high performers as somebody that works at a company specifically trying to attract high performers, you'd want to understand what your EVP is. What that means is employee value prop. And the question I ask myself or ask a company is like, if there's a couple different candidates in your process and they have a couple different opportunities similar to yours, why should they go with you? If you can answer that question clearly from the talent's perspective, like what is your differentiator, that will help. Then you should have a vision. If you're the department head or you're the CEO, someone should be talking to this person and displaying the vision for the company or department, and make sure it's big enough so that this person's vision and dream fits inside it. Because if your dream is small and my dream feels bigger than yours, I don't really want to join your team. That's concerning. And then clearly communicate expectations on your culture. So that's like how we do stuff and why we do it. And if people align to those things and they have the skill, like if you're hiring based on those things, you should be in a better spot from a team perspective. Retention is more important than probably anything. If you have good people, find good people. No, not if. Wait a sec. We sometimes hire and rush. 30 days, you didn't find the right person. Just hire somebody. That's worse than sticking it through and waiting 4 months for the right person. Don't renegotiate on your standards if you can delay for the right person. Makes a difference, and then retain them really, really well.
Absolutely. I completely co-sign that. I think that was very well said. Yeah, it's like I said, your the company's success or failure hinges on those first 5, 10 employees, your co-founders. And in short, what Frank is driving at is alignment, right? Alignment of beliefs and values, and vision, right? It's like, well, maybe I'm happy getting whatever, let's say $80,000, $100,000 a year as a senior level programmer, and I'm kind of like very, for lack of a better term, like very like corporate minded, right? And not like startup minded, right? Frank mentioned about like showing initiative, right? Johan mentioned that actually, but that's a really important thing. But yeah, really great points there. Thanks, Frank. Wiz, go ahead.
Yeah, and that would be the last question I have before I slide on out this stage. Thanks again for hosting. Personally, I'm currently invested into the world of creativity, and creativity, to be specific here, I'm talking about media, new media, old media. I don't really care as long as it's consumable media. That's, I feel like it's fair game to me. And one of the things that I've heard mentioned here is this idea of finding the kind of right people that are not so invested into the culture of what it is they're a part of, but are able to take a step back. And I wanted to ask a specific follow up in terms of the culture aspect. Like how does one go about curating a culture that is not so far removed from the mission statement or the North Star, if you'd rather call it that, but also is willing to pivot on a dime if they feel like it, or when they need to, as a matter of fact, because I feel like a whole lot of people will need to pivot very quickly, and people can't really attach a sense of identity anymore to their old roots. So if you can provide some insights on that, that would be really helpful.
That's a really good question, Wiz. I saw Frank your hand shoot up there. Would you like to take a first crack at it? I assume you're you have a response. Yeah, go ahead, man.
Thank you. The things that I've seen that work well, and just what you just asked about, what like strategies or ways do you have to create culture or define it? I think of it as there's probably three. You want to think of three words or phrases, and it should all stem from the founders. If you're going to have long-term founders, like what do you guys embody? If it's not like true to you, you can't make it one of your three values. Because I'm going to be very confused when you tell me this is the values of our company. And I meet you, and you're not someone I can trust. But trustworthiness is the top thing you say. So align it to you, and then think about like the characteristics you like that you want the rest of the company to have, and hopefully they're almost like a diagram. Some overlap, but it should not be complete overlap. Otherwise, find one or two other adjectives.
Absolutely. And just to like briefly add to that, I think it's I would say expand on it really is yeah, like I think to be able to kind of curate that sort of culture, you gotta lead by example. As I was saying earlier, it's not do as I say, it's do as I do. So if I expect everyone as employees, as high performers, to roll up their sleeves and do anything and everything if needed, if push comes to shove, and it's like, something that's uncomfortable for them in terms of, obviously, if they have like zero programming knowledge, there's no business, and like you're clearly not running your startup well if you're like relying on someone that's like, let's say a concept artist, right? And you're like, hey, you need to like do some coding here, right? It's like, you're probably not, you and your co-founders are not doing a very good job in running the business. But, assuming that's not the case, it's like, it could be things like, collecting the mail, or even like getting in your car and like delivering something that's like a customer is expecting, because, we're running late, and it has to be like, it's like, in order for the customer to like not get angry and for us to deliver it on time, someone has to get in the freaking car and like drive like 30 minutes or an hour or 2 hours. Like, yeah, it's not in your job description, but you got to lead by example. Yeah, you're the CEO, but whoop-de-doo, you're like 3 or 5 people in your company. So like show that show that you mean what you say, and you actually stand by your values, let's say of initiative, right? By actually embodying that. Frank, go ahead.
What you were sharing made me think about how important it is to like review the performance of your current culture. We often do like sales and KPI reviews, but like once you've assessed and determined what your culture should be looking like, check to see how it's going. Because one important way to attract high performers is to and retain them is by actually making decisions and saying, this is not an easy decision. John's a great performer, but John is no longer going to be with our team because he doesn't align to our core values. The rest of the team, if you're doing this correctly, should feel relieved because he wasn't a culture fit and was negatively impacting them. So be cognizant of who you add, but also who you retain. And there's three potential things you can look for to assess if someone's giving like an employee's a positive to the culture. They're either a culture maintainer, they don't detract or add. They're a culture driver. Those are great. You'd like some culture drivers in your company. They don't necessarily need to be your leaders. They can be leaders at any level of the company. And then there's culture adds. You should not shy away from any of those people. If they're performing that way, that's probably a good sign. So,
Wow, that was very well said. I think those 3 points, I'm gonna actually go back to this recording and just listen to this segment. Lots of nuggets there. Sensei, I saw you waving your hand. I don't know if you wanted to chime in Welcome to the space.
Yeah, thank you, Tim. Yeah, actually, I was just agreeing with Frank, and then by mistake I pressed the hand. But I have a bunch of questions, and I would like to start off with like my first one. Especially, I've had this challenge in understanding how to get to the right network. Um, so right now, I am currently self-employed, and I'm working like with just a few local businesses to help them here in Vancouver actually, and I just help them run their website and their digital marketing and other stuff, and I outsource some of the things. And on the other hand, while working with these guys, I've learned a lot from their businesses, and at the same time I've been trying to incorporate a business back in my home country in Uganda. So I've been trying to basically start up a solution for farms, which is based off IoT and other tech solutions. Because in Uganda, this is something that's like very minimal, and they have like less data tracking. Farmers are not sensitized enough on how else they could, let's say, source things like seeds, because that's one of the phases I am in. So that's something I have more relevant knowledge in at this point. So, for example, Ugandan farmers uh, are pretty constrained to just a fixed set of distributors who distribute these seeds in the country, and they don't know how else they could have sourced the seeds, for example, right? So, for example, we are noticing this problem that they don't even like have the knowledge. First of all, they don't have access. Some of them don't have access to the internet, and some of them have access to the internet, but they use it in a different way. You know, it's not to grow their farms or something like that. And now many of these guys are subsistence farmers who rely on the farm income, and they also rely on it like for a source of food in a way. So at this point, my main uh, issue is like we are having like potential leads for investment, but I'm having an issue in understanding if it's the right investor, because I don't want to get an investor at this point just for the money, but I rather want to get an investor who can also like contribute some different kind of value to this company, right? So right now, the main leads that we have actually got are from farmers themselves. Some farmers who have liked some of our prototypes, some farmers who have liked our advice. We have also been advising them on things like electroculture, which is not known in Uganda. So we are going on that route, and we are seeing definitely a lot of positive response. But this is one of the main things, you know, on how to source the right investor in a way, and where to get them in the network, even if it's here in Canada, even if it's anywhere else. Do you have any idea on a funnel or something like that? Thank you.
Yeah, wow, that was a great question. Very relevant to our topic today. Johan, would you like to uh take
Yeah,
a
I
take a
mean,
try at that first?
I'm not familiar with the farming world or anything like that, so I just have to give that out as a caveat. But what I would say, I really like the question because this is the thing. A lot of the fact that he's even thinking about making sure that he gets the right type of investor tells me that he's thinking correctly. Because sometimes if you're just looking for the money, that you could actually detrimentally affect your business. So the actual question you're asking is how to find these investors. I think what you need to do is figure out what it is that you want from an investor, because most investors, they're very open with whether they're dying, they're what they invest in, what types of things that they can do. You need to look into the networks, because if it's going to be beneficial to you, and maybe you just need the funds as well as a network to get more, because most investors comes with more investor friends, right? So that's the standard. But when you're looking to an investor, you need to kind of ask these questions, because the reality of it is a lot of us, we're just so focused on the I need to get the money, but we forget this investment needs to come with something. Your business is an asset, right? Just getting a check written should not be the be all and end all. You need to know that that investor is going to benefit the end goal of the company at the end of the day, whether that's their network, whether that's the people that they know, are they in the industry that you're in? Can they open doors for that? These are things that you should be thinking of. Now, in terms of Where you can find them, I don't know the farming industry well, but I do know there are ways I go about finding investors. So you are going to have to kind of network utilizing social media if you don't have the network currently. Your local community. I don't know where you currently are. I know you mentioned Canada, but if you are in Canada right now, I would go to local communities, municipalities, because I think you may actually find investors that way. Know when you're actually ready for that high stake investment, though, because maybe you need just an angel. Maybe you need somebody. You said that you had farmers looking to invest. Sometimes the people that do the thing that your solution is might be a good investment person. I don't know. I really am trying to just give you some nuggets because I'm not really familiar and I don't really want to say too much that might not be good information. But that's what I have right now. I hope that helped.
Yes, thank you. Um, I'm actually, yeah, I'm in Vancouver, Canada right now, and thank you for your information, especially about the municipality thing. And yes, it's not only constrained to like farms. So like speaking from my background, like I'm a computer science graduate, and when we're looking at something, when I personally look at something from my perspective, it's more like, okay, I am trying to break it down in form of an object, and then I'm understanding all these variables attached to it, the dependencies, and I'm just doing like a whole bunch of qualitative and quantitative deductions and analysis out of this case scenario, and I break them down into smaller case scenarios. So like this is how I go about it, because it's like the way, yeah, we've just been programmed to do it in a way as computer scientists. So the main solution that we're trying to implement is to uh, come up with a technology ecosystem for farmers, like a all-in-one app where they can find um, distributors, they can find other farms, especially with subsistence farming. It's like we want to get them to, for
So you want to
example,
build it. Sorry to cut you. Are you trying to
yes,
build a
please.
marketplace for farmers
Yeah,
specifically?
yes. Yeah,
Okay, good.
that's
I'm
how we
glad you
proceed.
elaborated. That's a little
Yeah.
bit more clear.
Yes. So right now we are in works of building a marketplace, because what's happening is that these farmers, as I said, right now they don't even have access or knowledge of how to use the internet to their benefit, or even, let's say, find someone else to supply their goods to. They are fixed. They are conservative in some sense, and they have just been using the old methods, the old people who they supply to, and what this has done is like it's slowly leading to the increase of food prices those ends, because even the supply chains have been overextended. There are multiple players to do with simple things, and they should not exist technically. They're just getting a cut for nothing out of this, and food prices are going up thus, right? So the only way that we are building this startup right now, we are looking at it from the ground up, right? We're looking at it from, okay, from the seed, and from how the farmer even sources the seed to all the way now going into the market and stuff. But it's going to be a gradual process, and because we want to make sure the app, the marketplace, has like a proper functionality, especially at the start. And yeah, it's according to the legal compliances and stuff, because there's a bunch of like complexities in Uganda. But right now it's like a very it's a very it's like a gold mine, because the thing is that in Uganda, at this point, there is a lot of arable land, but just 38% of it is being farmed on. And yet, 68 to 70% of the population is employed in the agriculture sector in Uganda. So you can imagine that if 70% of the population, which is Uganda's population is around 40 to 42 million. So you can imagine, and 40 to 42 million in a land space which is smaller than British Columbia in Canada. So it's a very small land space, but still there's a lot of arable land, and it's very fertile land. Like you can literally, like I can put it like you can throw a nice seed, and it will just grow, and you might not have to care for it. It's like that fertile. The rains are nice, and it's good land.
It
But
See,
now,
sounds okay. So I wanna
yeah.
sure.
just rein
Go
that in
ahead.
a bit, Tim. Yeah.
Yeah. Yeah.
Because I think we talked about a lot in this room, and I love that you're explaining it. But when you talk about investments, one of the things we talked about really early on in this room was knowing when you're ready. I know that
Yes.
you mentioned that. Um, but do you feel where you are currently you're ready for investments? Like, do you have a minimal viable product, something to actually ascertain? Because one thing I did actually hear you say is farmers don't know how to use the computers or internet.
Yes.
If it's a marketplace you're building that's digital, if your target audience lacks the knowledge, then that means that you have to educate them. So how sustainable is that scalability wise is my question.
Okay, so scalability wise, we have, as much as I agree, it was a very complex route, but we thought about a bunch of solutions that we could come up with. So, in the starting sense, we're looking at maximizing farmers' yields to ensure that their output capacity increases over time by sensitization in a way that we are even gonna go in person. We have a team dedicated to go in person to these different farmers and reach out to them. Also, to increase like our outreach and make it a little simpler as well. On one end, what we did is like we tried to also first reach out to those that actually have phones and know how to use phones, for example. And by phones, I mean like smartphones. Otherwise, all the farmers have phones, but there is a
Okay.
population that doesn't have smartphones. Yeah.
Okay. So based on what you've just said, it tells me that that might be revenue heavy because now are you not going to have to pay the people to go out and educate?
So at this
What is the
point,
cost for that?
everyone who is working or they're going out to these farmers, they are either making a commission or they are just doing it for free. So it's like they're on the team, they have an equity for each project that we do, and let's say we fulfill something because they are also committed to the purpose. So whoever is working in it is also like friends that I have been with. So the team that I got back together is like my primary classmates. So I got back around like 10 to 13 people from my primary school, and like all of them were in it. So we all have a group
So how
Okay.
many
currently,
out
and
of the
So
13, because I really want you to get concise, how many
yeah.
out of the 13 are equity distributions? Who has equity in the company?
5 of us.
Okay.
Okay.
The thing
Is this
is,
a passion project? Is this a passion project?
No, not
Like
at this
where's
point.
that?
It is not
Sorry.
patented at this point.
Okay. Frank, did you want to chime in a little bit? I just want to be mindful of everyone's time and I'm more than happy to DM you, Sensei, on the back channel. You can DM me.
Thank you.
And that's interesting that you live in Vancouver. That's where I'm at. So that's kind of cool. If you have a pitch deck, send that my way. But yeah, I just want to be mindful of everyone's time. And Johan and I just wanted to share a little bit about equity distributions as well. Frank, did you have something you wanted to chime in either on this or something else?
Thank you. Just wanted to, great conversation. Great job, Sensei. The thought I had was when you asked about how do I find someone to partner with because you're looking for an investor and like someone to help and work with you. Think about what you enjoy doing that you're naturally already good at. So anything that you like to do and you're really good at, you would probably want to keep that and bring someone that has skills that are in things you don't like to do. So it's complementary, and then they can own those things.
Yes, definitely. Okay, so the case over here is like I'm not the only one, for example, in the company, and as much as like seeking an investor is coming to the point that we need an investor in a way that um, actually knows the industry, has like ways to especially establish us into the foreign market. So what we are looking at most probably is like going for a US or Canada based registration and then putting
okay,
it
okay.
into
So I'm
Uganda
gonna
as
give
an
you. I'm gonna
FDI.
because we really do need to like be mindful. So here's the thing:
Yes.
Crunchbase. And a lot of people don't know what Crunchbase is. This is where investors um are listed, right? If you go to Crunchbase, you can actually search up investors in their field. So when you're talking about things like
I think I know what you're driving at, but if I'm missing, then you can chime in. Yeah, Crunchbase is definitely a resource. I'll post it on the chat because you want to kind of know, right? What you're trying to do, as I understand, it, is egg tech. So using technology to help farmers agriculture. So egg tech,
right? AGTECH. So you want to Google on Google Crunchbase egg tech. But yeah, just in the interest of time, because I do unfortunately have a hard stop in like 15 minutes. So I really want to kind of do justice to just all these great panel of speakers as well as listeners, because Johan and myself, we really want to give value to everyone. And please don't, I hope you don't take it the wrong way, Sensei. I'm more than happy to look at your pitch deck as a starter. And there are resources, for example, here in Vancouver called the Keiretsu Group, KEIRETSU. It's an angel investor network. So I would advise you look into that. So yeah, if Frank, if you or Johan, if you had anything else to add, go ahead. If not, let's charge ahead to kind of our final point about equity distribution.
Okay, great. And thanks for that, Tim. So when it came to building out the equity, one must understand how companies are structured. Structuring any company, whether you are starting out, because a lot of companies it stumbles across, they start off as an LLC, and people tell you you can't. We talked about it earlier, knowing how to be prepared for even venture investment, because the reality, if you're not structured correctly, you're not ready for investment, right? So even down to being an LLC or corporation, being in Delaware, all of these factor in to whether or not you're ready for capital investment, right? So once you're thinking about it like that, knowing how your shares are going to be distributed is going to be a good thing. So for me, I literally spend a few days like planning 5, 6, 8 years, because if you think about it, a company really doesn't get successful. Most investors invest with the understanding that in 8 to 10 years they're going to reap some kind of exit, right? So I planned my shares around that. I allocated shares for my employees, the ones that haven't been hired yet, where they come in, whenever they come. I positioned it in. I even things like advisory shares. I factored in. Understanding what your goal is and your exit strategy is going to help you with this. Because when you're distributing equity, you need to figure out what your exit strategy is going to be. Do you want just a clean exit? You want to get this as far as you can go and you just want to sell it and move on? If that's your goal, fine. Maybe you don't need to too much worry about your equity, because equity is going to be the deciding factor of control. If control is something that you want to maintain, you need to really be thinking about distribution of equity. It's one thing that you need a key performer in it, and they're going to want a certain amount of equity. But being able to understand that you have a hard no, this is not what I'm willing to give up, is something you need to do, because sometimes founders have made mistakes where they just give equity up because remember, it's this inconsequential thing because it's just numbers, because the business is not ready yet, right? It's not valuable yet. Your company is only as valuable of how much somebody wants to pay for it at the end of the day. But you need to be thinking about it. You really do. I think the Sam Alton thing with the whole Google, I reveled in that story because I was like, yeah, Sam Alton created the most corporate heist I've ever seen in my life. Google tried to push him out because when I saw that sale and Google took 51%, I was like, what? And I was like, who does that? But guess what? He knew that he could get away with that because if he leaves, everybody who matters is leaving with them. That knowing that power, you kind of have to really be thinking about it. So equity distribution is something you need to spend time on breaking down, fully understanding, because once board members are added, again, depending on the structure and the end goal of your exit is how you want to navigate structuring your equity distribution.
Absolutely. Those are really great notes, Johan. And just to even circle back to what you said earlier about, when you're looking for investors, like having a spreadsheet, having some sort of management system where it's like, okay, I reached out to investor XYZ, angel ABC, right? You want to keep track of dates of like when you reached out to them, when you need to maybe follow up, right? But also, you can use that as a spreadsheet to be like, if they do invest in money, to keep track of how much money they invested in. Because I'm telling you, it's a nightmare if you don't keep track of it. And then later on, let's say, your company is worth millions and millions, or even $1 billion. Your company is like a unicorn. That's freaking awesome. But when people are asking, like, okay, like how much percent shares do I get? Now you're looking back and there's like, you have like 10-20 million dollars of like investment, but you're not keeping track of like who owns how many shares. It's a nightmare working backwards. So having those systems in place, having that structure, to Johan's point, is critical for even those back end things. Think of it as like you're building a startup. It's like building a house. You want to have good foundations, because if you have really poor foundations, it might be a situation where like the foundation is crumbling. There's rust. There's like salt water, that gets into the rebar, and the structural engineer is like, I'm sorry, but based on our inspections of this house, we need to replace the foundation. That's big bucks, right? Or you walk away from that house. So you want to take the time as founders to set those foundations right. Don't rush. And even Frank said something I think I need to like tap on, which is like, don't rush in hiring employees. Just like, oh, we need something right now because we need to show that. No, do it yourself. Do it. Maybe hire among your co-founders, or like whatever, like a contractor that's just like hopefully a good contractor, well vetted contractor. But like, don't jump the gun, because it can sink your boat if you just I'm seeing a hand up. Go ahead, Frank.
You can totally start every working relationship initially as a contract to eventually go higher, and that's totally fine. If people reject it, then you can pivot, and if you want it that bad, like, do permanent right away. But you can do that, and it's protecting you. There's laws and differences. If you have an employee, it's much more difficult to step away from than if it's a contractor, or just an SOW, scope of work. Let's say you have like a tech project. In regards to what we're talking about, I think it's interesting. We're talking about capital and spreading equity. If you have a group of founders, you figure that deal structure out. But if you're bringing on new people, there's a lot of creative ways to structure the deal so you don't have to give up straight equity, but still incentivize the team you have. I find, based on some research, if you build your business to like 25 million in profit, you increase your multiples of being able to sell your company by much higher. So if you could build to that number, you could then sell your equity for much higher multiples. And people always say building from like 0 to 1 is already tough. So like, let's say you've spent 4 years building $1 million business, like that's hard. Like, you don't have to give up now. Like, if you wait another 4 or 5 years, like you could be at 10, 15, 25 million in profit a year, and you could then sell it for like 100, 200 million, and you chilling. Like, waited 4 more years before you like don't have to work again if you don't want to, versus giving up and saying, now I need to find my next venture to go big. So keep persistent.
Yeah,
And
I
an
just added
example. Oh, sorry.
Oh, I
I
thought
was
you was
gonna
done.
just.
Sorry, Frank. Carry on.
No, I just scrolled down from my notes and I forgot the point. If you want to be creative, you could do a profit share pool. That's a legitimate way. You can incentivize employees. You could do bonuses, but you can also do profit share pools, and that keeps and maintains the equity of the company in your hands, but still incentivizes them.
Yeah, no, really great advice, Frank. And I think Tim, when it comes to employee equity and incentives and stuff like that, that's a whole nother room possibly we could do on that. Um, I just pinned at the Jumbotron at the top a really great resource that I found, and actually is very widely known. It's called Carter.com. And when it comes to distributing your equity, understanding who has what, and okay, I really don't want to go too deep because I'm aware of the time, but when you raise a fund, around a fund, whatever shares you have is going to get eventually dwindle, right? It's going to deplete and people are going to get their low. So you may start off with 100% equity stake in your company, but once you get and invest it in, that 100% is going to deplete, right? One of the wonderful things about Carter is that it shows you all of this, and they have such really great tools and resources to fully understand how your shares distribution works and things like that, just to get to an understanding. And there's a plenty of stuff on YouTube, but I try not to push people to YouTube University, because if you don't know the basics, you can kind of get lost with the knowledge, right? So just do your best. I just put the tool at the top. And Tim, this has been really great. We should do this often.
Likewise, thank you. This was a great. For those of you who don't know, actually, this is the first time Johan and I hosted slash co-hosted a space. I thoroughly enjoyed this. I learned some new things, and I hope people here did as well. Um, and just as a quick tidbit, that sort of spawned this space was we Johanna and I were chatting on the back end about because she asked a really good question. And I immediately like my ears perked up like, wow, like who is this person? I need to like DM her or I don't remember which way it went. But anyway, we're like, okay, employee equity. And one kind of good strategy as well as like profit sharing pool to Frank's point, another good way to encourage and attract high performers and loyalty too is um have stock options and have a 1 year cliff. So in other words, let's say like there's four people, four co-founders, right? And we have a certain percentage, whatever. And in order to attract top talent, we might not be able to pay what Google or Facebook would pay in terms of like $150,000 for like a developer. However, we can pay maybe like 80 or $100,000, and the difference, $50,000, we can pay as like stock options. But you don't want employees, obviously as founders, you don't want to give away too much stock and you want to encourage loyalty. So it can be a situation where it's a bit of a hybrid, right? Where like to Frank's point, it's like you're still employee, let's say, someone, Jim, let's call him, he's like employee number one. So first year, he still has a chance to like share, a benefit from the profit sharing, but he has to put in a year of service, right? In the startup, just as we would all do in terms of grinding out the first year. And then he has the option, which is what I mean by 1 year cliff. He has the option to buy shares, right, in his second year. And then as he works more years, he has options to maybe buy more shares, or you can flatline it, right? So it's not like, for second year, he's allowed like, X number of dollars of shares he can buy, and then it sort of like linearly increases. It can just be flat. So those are ideas. I wish I actually have a good friend from Brighton, England. Originally, it's a birthday party here, so I need to disappear in 2 minutes. So I just want to round things up, and let's start off with Johan, my lovely co-host, and just speakers Frank and Chase. Thank you. It's guys like you with deep business knowledge that helps make discussions flow a lot more easier. And I think people can kind of understand things when it's not in the abstract. It's not like, oh, I read this thing from Harvard Business Review, good for you, right? And at the end of the day, it's like how are you applying that knowledge, right? I'm a huge fan of know-how. It's know how to apply that knowledge. So thank you, hats off to you for joining. Yeah, let's round it out. If you have any closing comments, and then we can wrap up.
Yeah, no, just thanks for having this space, and I hope that the people that catch it on the replay, we started off with the main basis is just immerse yourself in learning about this. Every aspect of your business, you must know. When calling yourself a founder and a CEO at the same thing, you are responsible for all of it. So immerse yourself in all the details because their eyes are always going to look to you to have the answer. So I'm going to leave it with that.
That's wonderful. Frank, Chris, Chase, I want to give you the opportunity to chime in before I wrap up. But yeah.
I would add that to me, people are at the heart of a lot of the topics we discussed here today. So if you focus on people and that perception and perspective, it will help you.
Well said. You had really good points, Frank. And honestly, like, I'm going to be listening back into the space myself because I think there's a few gems that Frank dropped here. And Chase, thank you for your time. Listeners, Fibonacci, I see you there. Spaces Dojo, thanks for joining. We recorded this space. So unfortunately, I'm going to have to wrap things up. So I just want to say a quick hi to you. Sensei, thank you for stepping up and speaking and asking great questions. Feel free to DM me your pitch deck. I also DM'd you the Angel Investment Group here in Vancouver. So have a look at your DM. Thank you, everyone, for your time. And I hope you have a good rest of the weekend. And yeah, stay tuned. I think we're going to try to work things out in terms of maybe making it a weekly thing. But, right now it's very much so. Go
Oh,
ahead,
actually,
Johan.
I was going to add that. Yeah. Founders Hub is a weekly event. I already started the first one on Fridays. You can catch it at 6 p.m. Eastern Standard Time every Fridays at 6 p.m. And so, yeah. And if you haven't already, if you go to the Jumbotron, it's the first post. You can join the Founders Hub community, all things Founders Hub. I'm trying to build, and I see Tim, and I love the fact that me and Tim have come together, because when it comes to being a founder, it's really hard. And without, just like what Frank said, without people, sometimes it's difficult. It's so isolating and lonely. And I think the community can help us all grow. We all have knowledge somewhere, whether we're early or we're further along. We can definitely help each other. So that's what I'm trying to build with the community called Founders Hub. Follow it if you haven't, and I'll accept you once I get the notification. And see you on Friday, y'all.
Very good. Thank you. And looking forward to working with you, Johan, in terms of just, again, facilitating and taking ideas to impact, right? To borrow from our good friend Josh, right? We really believe, I personally believe, collaboration is the new currency. And we want, this is, listen, this is my mission, in life, I feel like. This is my North Star. This is, my VC's North Star, which is to help. There's a lot of talented people right here in this space. I'm telling you, in listeners, there's people that pass through as well. They need a platform, right? They need a platform, whether it be access to capital. They need help in terms of pitch deck reviews, right? And I take it as a community service. I get a lot of personal enjoyment out of it. So yeah, with that, let's wrap things up, and hoping to see all of you in the next Founders Hub space on Friday. And take care, everyone.